Welcome to the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening online from September 23rd through the 25th for our worldwide audience, with over 50 renowned real estate and blockchain experts and academics representing over 30 countries from around the world. Visit blockchainrealestatesummit.com for more information about the event and to subscribe to our newsletter for the latest updates on innovations in the blockchain and real estate sectors. That's blockchainrealestatesummit.com. Enjoy the show.
Hello, everybody. Welcome again to the Blockchain Real Estate Podcast. I am Michael Flight, and we are the host of the Blockchain Real Estate Summit. As always, this is not financial advice. This is not accounting advice. This is not legal advice. You should always check with your experts and your own consultants for anything that we discuss here. This is purely for educational and entertainment purposes only. Our sponsor is the Blockchain Real Estate Summit, and the Blockchain Real Estate Summit is 3 full days of everything related to real estate, on blockchain, in blockchain, using blockchain, and also the intersection of AI now and other things. So we have some fantastic guests like the guest that we have today. Please go to the blockchainrealestatesummit.com to get the 2024 replay. That's 3 full days. More than 40 people from people from 40 different countries, all kinds of exciting stuff. And put into your calendar that the Blockchain Real Estate Summit 2025 is now scheduled for September 23 through the 25th, and that is also going to be online in 3 different time zones: Europe, Asia, and the Americas. But you can get the replay, which has a ton of really great actionable material and education in there. So our guest today, it's going to be a little bit different. He's somebody that I met at a crypto conference this past September, and he is Michael Smith. And Michael Smith is an independent investor. I want to say that he's a crypto expert because he is really fantastic about investing in different crypto and knowing crypto, and to the point where he's an independent guy and he just goes to these conferences to learn more and more. The other thing that Michael specializes in, which is why we brought him on today, is a term used in crypto called DePIN. So there's all kinds of different little words like DeFi, crypto, everything. And so DePIN is a newer trend and a newer term. And what I really like about it is it's the intersection of crypto and making crypto usable by how it actually affects physical real estate. So with that, Michael, why don't you just give us a little bit of introduction about yourself, how you started your crypto journey, and why this is going to really impact the rest of the world in the future.
Okay, great. Good morning, Michael. Thank you so much for having me on today. It's great to talk to you again. I got into crypto originally in 2019. I had been aware of Bitcoin since 2011 and hadn't ever acted on it, but I had been following it kind of tangentially. I'm a little bit of a reformed gold bug, so it kind of appealed to me. And so in 2019, I really started going down the rabbit hole, beginning to understand Bitcoin itself a little bit more. And then I started buying it. And then I went broadly into the cryptocurrency space, digital asset space, and continued to just learn more, try different investment theses and different tokens and whatnot. And I've just tried to continue to learn more and more as I go along. And it's a fascinating space. It's very intellectually stimulating. There is a lot of opportunity. It is a bit of a frontier industry. And in a frontier industry, you've got a lot of good actors, a lot of bad actors, and a lot of just very innovative, but flawed projects that just don't work. And there's no malfeasance. It's just so new that you will see a lot of failure. But that's a sign of a very healthy ecosystem and a lot of
right,
going on. Yeah.
right.
Yeah.
And so tell me a little bit about what DePIN is, because the reason why we really hit it off is we met at one of the parties and you were talking a little bit about, some of the things that you were investing in, and it ended up they also had like a physical, technology component to it. And then you even like dragged me over in the conference and said, talk to these guys because these guys, might be something that could create extra income for you. So why don't you
That's right.
explain what DPIN is?
Okay, so let's just start off with what decentralization is, right? So
Okay.
we come from, if you think about financial markets, we have centralized finance, you have banks, you have intermediaries, you have custodians. Cryptocurrency, digital assets have introduced a decentralized financial infrastructure where you can interact, you can transact on a permissionless basis, and you can also be your own custodian of your assets, right? And there's everywhere in between, from fully decentralized to slightly less decentralized, where you may choose to trust a party like an exchange such as Coinbase or whatnot, or you may choose to take your assets into your own possession using a hardware wallet.
And let's just hit on, because a lot of people sometimes don't understand custodian except for the guy that used to mop the floors in the schools. But the
Right.
custodian, as you said, you take control of your assets. So if you put your money into a savings account at a bank, they're the custodian of your money. Or if you invest in Coinbase, not invest in Coinbase, but invest on Coinbase, if you leave your stuff on the exchange and don't put it into your own wallet,
Mhm.
that means that they're custodying it. Is that correct?
That's correct. So they're custodying it for you. It's sort of like a bank deposit. However, they're not doing any fractional reserve banking with your assets. But you are trusting them on a technological basis and on an ethical basis to protect your assets. So there is some risk in that custodial relationship. Whereas if you take it into your possession in a hardware wallet or a software wallet, you are now custodying your assets, and there's operational risk, user risk in that. It is not completely straightforward, but it is a very large innovation in the financial markets. It's almost like we used to have bearer bonds, and the bearer of the bond was the owner, and you could show up and redeem it, right?
Right. Well,
So
yeah, and even one step further, exchanges, crypto exchanges, and stock exchanges and banks have all gone under, and people have lost money. The biggest one that most people are aware of is FTX, or the original one that everybody, I shouldn't say everybody, but a lot of people lost money in, was Mount Gox, early on in Bitcoin. But the same thing could happen if you look at, any number of banks that went under, a year or two ago. Those are backstopped by the U.S. government. The U.S. government just prints more money to cover that. But so what you're saying is that you've got your own bank, which is your wallet, which helps out.
that's correct. You have the option to take your assets into your possession and have zero counterparty risk.
Right.
And that is one of the main innovations of this. Now, I will say, so FTX is pretty well known. It was a fraudulent exchange, very mismanaged, lots of malfeasance. We do have a very high level of professionalism and due diligence in the exchange, professional exchange system now, with like Coinbase, Kraken, US companies. For instance, BlackRock custodies their Bitcoin with Coinbase, right?
Okay.
So it's it's very legitimate, but it has been, just as the cryptos themselves have been a bit of a frontier industry, frontier technology, so have a lot of the intermediaries and the operating businesses within, like the exchanges and whatnot. So there is a very legitimate, healthy exchange and custody base now. But there is just a general risk, as even if you have an FDIC insured account, that there's technological risk and ethical risk there. So anyhow, getting back on track, that's what decentralized finance is, right? So we're building a parallel financial system to the traditional financial system, which allows people to transact on a permissionless basis. So Michael and Michael can transact value on these different blockchains with no intermediaries, right?
Right.
As long as we're on the network and we know each other, we can do that. Nobody can stop us. And that's a huge innovation also. There's no censorship. It's censorship resistant. And so that's decentralized finance. So what is decentralized physical infrastructure? It is an incentive system to build out infrastructure in the real world, essentially is what it is. Now, what are the incentives? The incentives are generally paid in a cryptocurrency or a digital asset to the individual who is partaking in the building out of that network. So a pretty well-known one and well-established network with a very good real-world use case is the Helium network. And the Helium network started, I think, around 2017, 18. And originally it was to build out the Internet of Things on a decentralized basis. So what you would do is purchase a Helium hotspot, plug it into your home or business Wi-Fi, do some mild configuration, and this hotspot would then create a network, a peer-to-peer network with other hotspots around it, right? And it would offload Internet of Things data packets to that network, and then they would transfer that data to each other, and you were rewarded with a cryptocurrency based on the level of activity of your hotspot, right? And those were Helium tokens. So people who were early adopters of the Helium network and who were in a good location where there was a lot of data to be transmitted received a lot of Helium tokens very early on. And the kind of structure of the reward system had a kind of a half-life. So it started out in order to incentivize people to take the risk and the expense, the capital expense and the time investment to purchase this item, configure it, and then run it on their their local Wi-Fi network. They were paid in Helium tokens. And so there were, excuse me, significant rewards early on that increasingly diminished as the network matured. And it was published. It's in the open what the reward structure is. And then the reason for that is to bootstrap the network, you have to incentivize people. So there has to be an economic reward. And those early adopters did very well, actually. Made significant sums of money. And then later adopters made a little bit less and less money. And there's two reasons. One, the rewards were diminished over time on a programmatic basis, but also the value of the token as it became traded on through decentralized finance apps and also through centralized exchanges like Coinbase. It is a market, so it goes up and down. And so if you earned a lot of tokens early on, and then the token also appreciated and you sold, you could make a handsome sum. However, the market is volatile and it goes down, and Bitcoin kind of being the core of the digital asset ecosystem, everything kind of rises and falls generally with Bitcoin, which goes through cycles also. So long story short, that's the incentive mechanism to build out a decentralized wireless network that was very successful and actually fun to do, in a very low barrier to entry, low cost of entry. And then Helium since then has actually started a kind of a parallel network to their Internet of Things network on the 5G network. So they are now building a decentralized 5G cell phone network. I run one in my living room here. Costs $350 of hardware, probably 20 to 30 minutes of setup. And it connects to other Helium 5G hotspots, and it actually transmits a cell phone network for Helium. Helium has their own cell phone plan now. For $20 a month, you can have a cell phone plan on that. And then what really solidified it as a successful project is that earlier this year, maybe it was late last year, T-Mobile and some other carriers signed a network offload agreement with Helium. So when a major network carrier has a lot of network congestion, they have an agreement in place to offload a lot of that network usage to the Helium network, which is really validating, because what it shows is that this 5G network was so successful to get built out in a decentralized manner with these little hotspots that individuals place all around the world, and that the network became strong enough, reliable enough, and with enough bandwidth to actually take network usage off of the major mobile carriers.
Yeah, and let's just drill down on this, because this is the truly impressive thing. So if you take Verizon, T-Mobile, or any of the other major network players, AT&T, they spent billions and billions of dollars building out a network, and we're talking mainly in the United States, but you can choose your carriers anywhere else in the world. They spent billions of dollars installing hardware, having to get approval for giant cell towers and everything else. And then Helium comes along, and within a few years, I mean, when did they start? Like 2019 or 2020?
I'm not exactly sure. I think it came around 2018-19 was when the
Okay.
Internet of Things, the first Helium network started, and then the 5G rollout was only earliest last year.
Right, but the most incredible thing is that the first Helium network, within a few years, had coverage. There are spotty coverages in some places, but there's no population in a lot of those places. But they
Mhm.
had coverage, and they were getting coverage all over the world.
Yeah.
So it's so impressive, and they didn't spend any of their money like building this network out. It was all built out by just actually just crowdsourcing the network. So
Yes.
it's like, we have this technology, we have this, as you said, the hardware piece. So it's like, I can buy this little receiver or whatever it is. I plug it into my computer, and then I am, literally helping the network. And for helping the network, you get paid. So it's basically like you're one of the network connections, like an internet connection or a fiber guy. And
Yep.
the network traffic that goes through you, you get paid for that in Helium tokens.
That's absolutely correct. And it's a really remarkable business case study, because as you said, the cost of building out a traditional cell network, or adding just one tower or one node to that traditional network, is huge. There's zoning, there's licensing, there's the capital expenditure up front, and the operating expenditure is significant. And so the major mobile networks have, in some areas, reached a limit where it's becoming, the expense is becoming so great to improve coverage, that when Helium came around, it was really an excellent solution for them. And Helium has built out this capability, this real world communications capability, through this decentralized incentive structure, that it really is exceptional. And it's pretty amazing what they've been able to, how they've been able to augment the existing cell network structure without a huge capex and without a centralized planning element to it.
Yeah, and I'm just gonna reiterate this, because we're mainly into retail and shopping centers, and that's our line of business in real estate. And
Mhm.
so we love it when we can build a cell tower in the back of the shopping center. But we have had issues where in some communities it's like, well, it took years to get the cell tower approved, and then you had to make it actually look like a tree, and there was all kinds of other expense to get that approved. And then you need the lease, the long-term lease from a Verizon or an AT&T or a T-Mobile,
Mhm.
to get the financing to build that stuff. So again, I go back to, these guys just created this thing, and they built, it's got worldwide coverage. Like I said, it's not like complete worldwide coverage, but they expanded across the globe with almost no capital expenditure.
Yep, that's correct. Yeah, it's a tremendous success story. And it's a tremendous story for the digital asset ecosystem, because a lot of people can't wrap their heads around digital assets or cryptocurrencies. They don't exist per se, except that they do exist. And so DePIN is a really fantastic way to help people understand the incentive structures and how it actually connects back to the real world. Bitcoin, the original digital asset, is interesting too, because it's not a DePIN project in the sense that we're talking about, but it does have a physical connection through the mining, and the mining is decentralized, meaning that anybody can technically set up a miner and mine Bitcoin. The economics are always changing, and it's at a scale now that it's very difficult to do independently, like it was early on, maybe just 5-6 years ago. But it is the mining component of the Bitcoin network is the physical aspect that kind of connects the digital asset to the real world through the transformation of electricity into cryptography.
Yeah, and that's what I've especially when I've had discussions with Bitcoin maxis, and sometimes they're out of their minds, and it's more of a religion and less of an investment.
Yeah.
And their head explodes when I say, well, you can't have Bitcoin without real estate. And one of the biggest real estate plays over the past 5 years has been data centers. And I think data centers are might be overvalued right now. But there's no end in sight to people wanting to build data centers, not only because of Bitcoin mining and crypto, but also AI. So
Yeah.
that's something. But I want to get back to you, like completely nailed it on the head. And I didn't understand it at first, but um, with cryptocurrency, you can build in an incentive structure into whatever project you're trying to do. So if you want to bring in other people to participate and you want people to add value, sometimes you can say, well, we're going to, partner, joint venture, and you do this, you do that. But with cryptocurrency, especially, we'll go back to the Helium example. They said, you can be our partners and we'll pay you to be our partners, and you can earn this stuff. And so that's what I find fascinating. And that's what not only is blockchain the rails of the new financial system, and almost everything in the future, all value is more than likely to be transferred, on some sort of blockchain rails. But as you said, you can create these incentive structures that are completely outside, what has been possible in the past by, doing it with saying, for example, we're working on an education project right now. It's an AI education project. And, we're rolling it out in Colombia and Ghana and a few other places. And one of the things that we're building into it is if the kids hit certain, like just do certain things, we're gamifying it. And so then they'll get tokens. And so those tokens can be either like a Chuck E. Cheese thing where, they get, certain things to do with it, but also those tokens are going to accumulate so that they can use them for future education credits, like educational savings accounts. And that's the type of thing that you could do with cryptocurrency, because it's really inexpensive to create those type of incentives. Whereas before, it was really insanely hard to do that. You had to do like SNH green stamps, I think were the original ones, and then credit card points and everything. But you need a giant, system to track all that. Versus if you do it on a blockchain, the blockchain is a ledger that can track that.
Yeah, that's correct. And so you can create almost any sort of incentive structure. It has to be done well, and there are many tripwires in there. And I'm not a tokenomics expert, but getting network adoption and making a market for these things is completely possible. You can there's many things that could be bootstrapped through cryptocurrency that are much more difficult to bootstrap in the traditional sense. So there are many good use cases. In fact, there is a new private equity group starting up that is aimed specifically at taking legacy businesses that are running on traditional technological rails and transforming aspects of their business to the blockchain to create the efficiency in the business. Because people in crypto and digital assets for a long time have anticipated that a lot of traditional industries will naturally migrate over to blockchain because the economics and the efficiencies are so great, but there hasn't been actually that much of it. So this new private equity group is actually going out with the goal of acquiring these businesses and then transforming them through blockchain as a demonstration to all the other businesses out there, which will lead to eventually what you're saying, which people who follow this space kind of generally agree that everything is going to come on chain eventually. Whether that's real world assets, digital assets, titles, concert tickets, everything will be on the blockchain eventually, or have some kind of tokenization aspect to it.
Yeah, and you can even see that. I mean, California put all their car titles, on blockchain.
Yep.
It's going to be much more difficult to get, real estate title on blockchain, but eventually it, just makes sense. And I think real estate title on blockchain will probably happen more in emerging markets and other places that aren't just like, mobile telephones. There's much I can go to Eastern Europe or, Latin America and get much better cell service I can, here sitting in Chicago. So why don't you tell us a little bit about some of the other DePIN projects? Because we discussed Helium, and I think Helium is a fantastic use case, especially if somebody's got, an area where there's not a cell coverage that, is in the Helium network. If you put one of those into your buildings, and just do the small investment for the hardware, you can achieve some, extra cash flow and extra, income. But what type of other projects are out there that, are really good with this?
It's pretty broad. So you've got things that are wireless networks like Helium we've discussed. There's sensor networks, like I think the last time we spoke, we discussed GeoNet, which
Right.
is a GPS signal intensifier. So by running one of their nodes, you're participating in their network to increase GPS signal accuracy by an order of magnitude, which has huge applications, especially as we use mobile devices everywhere. And industrial applications like agricultural and military. So there's also computer storage and computer processing decentralized networks. So Filecoin is one that's been around for a while, where you can participate by apportioning part of your hard drive to the network and receive rewards that way.
And that's for data storage?
That's correct. Data storage. And there's several of them. That's just a really well-known one.
Right. And can I just clarify one thing? So is that like using like Amazon Cloud or something like that? You're providing a cloud for somebody? Is that how that works?
It's pretty much, it would be like a decentralized cloud. So when you're using the cloud network, you're storing files on somebody else's server in a data center, right?
Okay.
So this is kind of like decentralizing a data center, where I can use part of my hard drive, or I could set up a specific device, network it to their network, and then allow their network the permission to store and retrieve data off of my hard drive. And then you receive an incentive token based on your participation rate.
So aside from building a data center, this is an inexpensive way to, get into the data center game. By freeing up some of the storage on, some of the stuff that you're running out of your house or your office.
Yeah, that's correct. And so one that I think is pretty interesting right now is decentralized inference, which is the part of artificial intelligence that you use is the inference. When you query it, you're asking the model to make an inference, right? So you need a lot of GPUs and a huge data center to train a large language model, artificial intelligence, but you only need a little bit to make an inference once it's trained. And then the inference needs to be geographically close to the user so
Right.
that
So it's
low latency. Yep.
yeah.
So there are new networks now that are sort of analogous to the early days of Bitcoin mining, where individuals could mine Bitcoin, add security to the network, and be rewarded for that. Now you can run GPUs on a small scale and be rewarded by, there's several different networks doing it for providing the inference on an LLM to a user who's querying it.
Yeah,
So
I kind of stepped on what you were saying there, but when you talk about latency and you talk about geographic, I'm here in Chicago and you're in, the southeastern United States. If you were doing a query, and it's going all the way to Chicago or it's going all the way to Europe, it's going to be very slow because it's got to go over the network and then, come back. Versus if you're doing it there and, somebody is like right next door to you, the answer is going to come back much faster. So you're not just sitting there, looking at a cursor blinking, waiting for your answer to come back.
that's right. That's right. So that's important for your centralized AI models like OpenAI through Microsoft. They need to have the inference available to the major metropolitan areas where the use case is going to come from, right? So they then need data centers geographically nearby all those population centers. However, through like BitTensor and several other networks, you can provide the inference on a small scale out of your house or your business and be rewarded in tokens. Now, that wouldn't be for OpenAI, it would be for the decentralized AI models that are also being built
Okay.
simultaneously. And then there will be, this is a big frontier also, so there will be a lot of winners and losers, and there will be a lot of different networks and different projects that succeed on that. So there's risk in there, but there is also potentially huge upside, like being an early Bitcoin miner on your PC. You could have mined thousands of Bitcoins on a laptop back in 2011, right?
Yeah, and I think we can equate this to the dot-com era and also to the crypto era in 2017 when, there was all these um, different coins out there and different projects that, were trying to build things and they didn't go anywhere. And so you have to kind of pick and choose. But what are some of the other? I know there's another one where they're doing air rights, where you can sell your air rights or lease your air rights. I think it's called Skytrade. And that seemed very interesting to me because, again, I'm going to go back to my experience in real estate, but it's also can work with my experience in real estate is with retail. And so if you do the air rights to a shopping center, you could actually create a drone landing pad or some other place where you could do like a centralized delivery. And that could also work for, people that have large multifamily apartment buildings on a campus. You could actually create a drone landing pad, or you could allow just drones to go, through your airspace, as a trusted airspace.
Yeah, that's correct. I've heard about this same project maybe 5-6 months ago, so I'm not really up to speed on it. But I think what they're doing is like one of the impediments to commercial drone activity, conducting business operations in the country, is that you have to have the rights to use the airspace to fly from point A to point B. And so not only could you provide a landing spot for shared use, you can also put your airspace rights on the blockchain and then have them traded and leased essentially for traffic to go through your airspace and have a revenue stream that way. That's
Right. And
my
what's
understanding of that.
fascinating
Yeah.
for real estate operators, because this is very common in New York City and in certain areas of Chicago and places that, have built up and out where, you could have the building there and you could also lease the air rights above it. Or
Right.
you could have the parcel there and say, you get the air rights and you can build a giant office building on top of it. But outside of those metropolitan areas, it's really hard to find, that type of use case. And then these guys came along, and to me, I heard about it immediately. It's like, this is something that's going to be very valuable to, real estate owners, not necessarily, could be homeowners, but if you've got, like, you're a commercial real estate owner and you've got, airspace that drones, would want to have traffic through. You've just taken something that you get no value out of right now and monetized it.
That's right. Unlocking another potential revenue stream due to
Right.
the efficiency of the blockchain. Yeah.
And
Yeah.
it's exactly like we've had, properties in New Mexico and Texas where they had mineral rights underneath it. And so either somebody else controlled the mineral rights or you could lease those mineral rights out. So you not only have, what you've got on the surface and what you build on the surface, but you've got what's below it. And now you can, perhaps monetize, the sky above it.
Yeah, absolutely. I think that's a perfect analogy. It is your airspace is another resource that you can tap into for that property. Yeah.
Yeah. Well, Michael, do you have anything else that you want to add? Because we're about at the end of our time, and I told you I didn't want to, like, take up too much of your valuable time, but I have learned a ton, on this call. That's why I wanted you to, like, come on and explain this to other people. And if other people start hearing about, instead of, oh, Bitcoin is, really moving, or, it's just dropping or anything else, it's like, there's actual real world use case for some of these projects, and real world use cases to how to get paid for, working with some of these projects.
Yeah, no, that's right, Michael. So once again, thanks for having me. It's been an absolute pleasure. I would say if anybody is curious about this or even skeptical, I would have two recommendations. I would say you will learn more about this space and digital assets by interacting with them than you ever will listening to a podcast or reading about it. They complement each other, but you have to get your hands dirty, so to speak. So I would say the first recommendation for anybody is to go buy a small amount of Bitcoin and just interact with it to the level that you're comfortable with to wrap your head around digital assets. And I would say number two is just participate in a very low barrier to entry, low cost of entry, decentralized physical infrastructure network, just to get some experience with it and go through from soup to nuts, purchasing it, setting up your wallet, and then seeing the rewards come in and then claiming your rewards. And that just goes a long way to opening up your mind and really understanding this so that you can, even if you're not going to be the doer at the site of your property, you'll be better equipped to make decisions about that investment, large or small. You really need to interact with this stuff to be able to understand it and make decisions about it.
And I'm going to put you on the spot here because we've talked about wallets and we talked about custody and everything. And it was very difficult for me to open up a MetaMask wallet at first because it's just not intuitive and, all the rest of it. So can I ask you what your preferred, hardware wallet is, and if you have a preferred software wallet so that you can collect stuff directly into your wallet?
Yeah, absolutely. So for Bitcoin, my preferred hardware wallet is the CoinKite. I just look over my block clock because I can't remember the name of the company, but CoinKite, they make an excellent wallet. It's incredible, very safe. And that's a great, just downloading your private keys to a hardware wallet is an incredible exercise in educating yourself about this. It doesn't have to be a large sum of money. It could be $5. The software wallets are all sort of somewhat dictated by the project, right? So if you run a Helium node, you're going to have a Helium wallet. But the good news is that Helium migrated its entire system from its own blockchain, which is Helium, over to Solana. And so now you can use a Solana wallet, which functions really well. MetaMask is an Ethereum wallet. The user interface is not great. It's very confusing. I try to avoid it because it is just so clunky and unintuitive. But it was important for me to get a MetaMask wallet, set it up, and interact with the DeFi protocols to understand how it works. I could read about it. I could listen to it on a podcast. It doesn't sink in until you actually do it and you do transactions on chain. So the Phantom wallet.
Is there a better wallet other than MetaMask, like maybe a Brave browser wallet or something like that that can also interact with Ethereum?
Yeah, I think Brave is multi-chain these days, so I think that would work. MetaMask seems to have kind of the lion's share of activity for wallets in the Ethereum space. There's several others. There are a lot of ones. But that's the one I use on the Ethereum side of things. On the Solana side, the Phantom wallet has really taken off. It's much more intuitive than MetaMask is. But if you're going to run, so for instance, if you wanted to just experiment as a learning experience for a low cost of entry, you could buy a Helium Bobcat miner to set up their Internet of Things miner, or you could buy one of their 5G nodes for $350, bring it home, set it up, put it on your Wi-Fi network, and then you'll go through the setup instructions and you'll download a Helium wallet, and then you could download a Phantom wallet. So your rewards will come to your node that you're running. And then after a week, you can check in on your node and see how many rewards have accrued. And then you will connect your wallet to it, redeem all of your rewards. So the rewards will go from the Helium network to your wallet. And then you can use those. You could sell them. You could transfer them to your Phantom wallet. You could do all sorts of things just as a learning experience to start understanding the blockchain and interacting with DeFi.
Right. And the other key thing that I think a lot of like real estate non-crypto people are going to wonder about is like, how am I going to spend those Helium things? And so the good thing is that you can convert those Helium tokens into like a USD stable coin or a Tether stable coin. So it's a dollar denominated coin, so that you'll have actual dollars.
That's correct. And then that's the other, the kind of the high right tail outcome of having a high return on investment here is that if you select a DePIN project early on and that token that you're being rewarded in is traded on a market, centralized or decentralized, well, it is subject to market forces, so it could appreciate dramatically. And so you could then, if you're an early adopter, you could be earning X token. X token becomes listed on Coinbase. X network sees a lot of adoption and use. Then that token will take off, and that's when you can sell that, capture your cost of your CapEx, and hopefully some profit. But I would start off without even the objective of making a profit, just interact with it and run something simple.
Right. But I think, the entire thing is that there's the potential to make profit. There's the potential to add extra income to any of your properties at a very low capital cost. And at a very low, here's the other thing. And this is when tenants come to me and they say, well, we want to put a storage trailer out behind our store. And I tell them, well, you need to pay for it. And they're like, well, why do I need to pay for it? And I'm like, well, I don't come into your store and like ask you to take stuff out of your store for free. The only thing we're selling is square feet. So this is a great way to optimize square feet, or, optimize your physical property without taking up a huge amount of, space in your property.
Yeah, absolutely. Yeah.
Well, Michael Smith, I really appreciate you coming on today. I really appreciate everything you've explained to us. You've opened up my world in the times that we've talked. Every time I learn something new. And we really appreciate you coming on and just explaining, how some of these things operate.
Absolutely, Michael. So great to talk to you again. Have a great day and have a great weekend, everybody.
All right, well, that will end today's program. As always, this is not financial advice. This is not legal advice. This is not accounting advice. You should always check with a consultant or an advisor before making any type of investment or purchase. And we'd like you to go to the blockchainrealestatesummit.com website if you're interested in investing in the 2024 replay and it's really inexpensive, and you get full 3 days of everything. And also mark your calendars for September 23rd through the 25th, 2025, for the Blockchain Real Estate Summit 2025. Thank you very much for listening, and have a great day.
Thank you for tuning in to the Blockchain Real Estate Podcast, brought to you by the Blockchain Real Estate Summit. Don't forget to mark your calendars for the Blockchain Real Estate Summit 2025, happening September 23rd to the 25th, online for our global audience. Secure your tickets today at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback helps boost our visibility and allows us to reach more listeners like you. Have a guest in mind you'd like us to interview? Let us know by leaving a comment at blockchainrealestatesummit.com. Thanks again for listening, and we'll see you at the summit.
Adam Carswell, the voice of liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.